Good afternoon, everybody. Welcome to the Moving Markets Podcast. This is a supplemental extra podcast for Wednesday, June the 18th, 2025. I had no intention after the podcast I did this morning of being back online today, but I thought it would be worthwhile to give some quick commentary on the Fed decision today, the Fed commentary, what it means for us and for our portfolio going forward, and what I think is going to happen with the markets in the next couple of days. Now, remember, tomorrow the markets are closed for the Juneteenth holiday, the 19th of June. So no trading tomorrow. That means Friday becomes kind of an isolated trading day. A lot could happen between now and Friday, and then following Friday, you've got the weekend with no trading, and so people tend to be pretty conservative when you occasionally get a Friday like this that's kind of an isolated day. This oftentimes happens around Thanksgiving, Christmas, New Year, when the holiday is in the middle of the week and you end up with an isolated trading day, just like one day by itself with no trading the day before or the day after. So it doesn't happen a lot, but it happens once in a while. So with that said, real quick recap for those that may not have seen this. Dow finished down 44, S&P finished down 1.85. That barely registers as 0.03%. So for all intents and purposes, that's very flat. NASDAQ up about 0.13%. So kind of mixed on what the Dow did versus what the NASDAQ did. But I would say all of this is a relatively flat day compared to what we usually get and what usually happens. And I think it's because Jerome Powell was really, again, my opinion, giving mixed signals. I feel like Jerome Powell today was talking out of both sides of his mouth, and it created some confusion. And just to illustrate that confusion, if you look at the one-day intraday chart for the Dow, let me get it up here. If you look at the one-day intraday, you can see that the market started today to the upside, got pretty decent move to the upside. I think at this point in time, the Dow was up around 200 points from the open or from yesterday's close, came back down and leveled off. And all of this was in the neighborhood of 110 to maybe 130 points to the upside. Then you had, this is about the time Jerome Powell started speaking, little spike to the upside on news that there was not going to be a rate cut, but the Fed was sticking with their forecast of 2 more cuts before the end of the year. They didn't want to alter that. But then Jerome Powell started talking, and you had this seesaw back and forth. And these are the two things that to me felt a little bit contradictory. Number one, I already stated he stayed with the notion that we are going to have 2 more rate cuts this year. So you've got that on the one side, and then on the opposite side of that, he's saying that he thinks inflation is probably going up from 2 to around 3%. Based on what they think is going to happen in the future, and that if this does happen, they have to be flexible enough and be patient that maybe there's no rate cut. So to me, it's talking out of both sides of your mouth. It's saying, I think we're still going to do 2 rate cuts, but we might not do 2 rate cuts because we think inflation is going to go higher. Here's the problem I have with the comments about inflation going higher. This really kind of ticked me off, even though it wasn't like a massive sell-off or a big, huge rocking of the markets. What bothers me about his commentary is this. For a number of years, Jerome Powell has said over and over again that the Fed is data dependent, that they look at the data that happens. And the reality is all data is past data. Anything else anything you're trying to do in the future is speculation. It's guesswork. You can call it whatever you want. You can say, based on all this information, this is what we believe is going to happen. This is what we think is going to happen. This is what we're projecting is going to happen. When it comes right down to it, it's all educated guessing. I don't have a problem with that because you trade the U.S. markets. You're making educated guesses every time you place a trade. You're making an educated guess on what's going to happen with a particular stock or with the markets in general. So I don't have a problem with that. What I have a problem with is the lack of evidence that he has for what he is projecting or supposing or predicting is going to happen. Powell said that because of tariffs, he believes there's going to be an increase in inflation. Now, there hasn't been so far. It is possible that there will be. I'm not arguing with the premise that it's possible it's coming. But when you start predicting that it is coming, and you have absolutely zero evidence to support that, and from where I'm sitting, there is zero evidence to support that. When Trump played this game with that, maybe that's not a good way to phrase it. When tariffs became an issue in his first term, everyone predicted doom and gloom, and it simply did not happen. There's one piece of evidence to suggest that tariffs do not automatically equal inflation. And again, I know it can get to that, but it hasn't so far, and so far there's no evidence that it will. I believe it's possible. So the data that he claims the Fed is dependent on does not support his premise that there is likely to be inflation. The other thing he's basing that on is he made one. I heard this as he was at the podium and the microphone today. He said basically everyone is predicting this. All of the analysts that we talk to, all of the people are all predicting this. Well, a lot of you that have been with my program for some time have heard me occasionally go off on my rants about analysts. I'm not a fan. I believe second only to meteorologists, weathermen and weatherwomen. It's one of the only jobs you have where you can be wrong 90% of the time and still have a job. Most other places, if you're wrong that much, you no longer have a job. No one's going to employ you when you're that consistently wrong. So I put him in a very similar category. I'm not a fan of analysts because so many of them are so wrong most of the time. So for Powell to say that that's where he is basing, at least in part, his prediction of inflation, it's so contrary to what he has stuck to and tried to say in the past. And I would add to all of this that Jerome Powell has either been wrong or late getting to the party on almost every decision he has made since being the Fed chair. He lied to us for over a year about inflation being transitory. He was way behind on when he started to make rate increases. He may have stopped increasing rates too soon and became too soon to make a rate cut. Then when he made the rate cut, he may have gone too far on it. And it's like he's just been flat wrong, or he's been behind on almost every decision that he's made. So I'm not thrilled with what happened. I do appreciate that it felt to me like the markets sort of saw through it. We gave up the bigger gains on the day. That's okay. I'm not too disappointed in that. It's like I said, relatively flat day. But my disappointment is in the inconsistency of what he's saying now compared to what he said in the past, and the fact that he's wrong so much more often than he's right. And I wish the guy had the ability. I've said this many times. I wish we could go back to the days of Alan Greenspan, where after a Fed decision or in a congressional hearing or whatever, Greenspan could talk for 30 minutes to an hour and say absolutely nothing. You could ask him a question and he could answer you. He could give you a 5-minute answer. And at the end of it, you had no idea what the Fed's next move was going to be, when it was going to be. They didn't try and predict anything. They simply acted when the time was right to act. I miss those days. I was not involved in the market or studying the market when Volcker was the Fed chair. But when I started taking an interest and started trading, I think it was right around the time Alan Greenspan took over that role. And I miss those days very much. I don't think Bernanke, Yellen, or Powell have done us any kind of a service as Fed chairs. But I think Powell has done us the most disservice as a Fed chair, and I cannot wait for his term to be over or for him to resign. So there's my 2 cents. Now, what do I think is going to happen? Look, I'm willing to admit I'm making predictions here, but my prediction is what the Fed did and said today is going to have very little impact and very little bearing on what happens on Friday and into the early part of next week. I believe what happens in the next 48 hours with Israel, Iran, and the US, that is going to determine how we trade on Friday and into next week. If things take any step at all towards calming down, if there's anything that suggests that we're calming down, I think that will be a really, really good I think that'll be a really good thing for the markets. I think you'll see bullish moves on Friday and into the early part of next week. If things escalate, if things get worse from the perspective of more U.S. involvement or Israel upping things or Iran doing something more drastic than what they've already done, I think the markets will react very negatively to that. And I think what's more likely to happen is that there will continue to be some tit for tat. Not that I'm in favor of that. I would be much more in favor of things cooling off dramatically over the next 48 hours. But if it just kind of goes on the way it has the last 48 hours, the back and forth, the tit for tat, I think the market will perceive that as normalizing a little bit. I know it's not the case for the people who live there and the people that are involved, but I think the markets will interpret that as a normalizing of things. And I think you'll see a slight bullish continuation in the markets. Nothing big, nothing major, maybe 1% to 1.5% move up on Friday at the most, or something relatively flat like today, but I don't think it'll be negative. So again, I just wanted to comment, our portfolio is in great shape. It weathered everything very nicely and very easily. Just in case you did not see what I put on Discord this morning, we dumped our Walmart trade, just closed it out where we were. We did the same thing with our CoreWeave trade. And then on the triple play side of things, we did the same thing with our DIA trade. We got out of those 3 trades today relative to the regular SOS trades and to the triple play trades. If you have not done that already, do that at the open on Monday morning, whatever the price is. Just get out, get whatever you can for them, close them and be done with them. And then I'll be back on Friday morning around 30 minutes after the market opens to kind of wrap things up for the week. Thank you, everybody. Hope you have a great holiday or day off from trading tomorrow, and we'll see you back here on Friday morning. Bye-bye.